everyone, Les here from BG Trading. Hope you are well. Today is November 21st, 2022. The ASX200 is near its all-time high. In this video, we're going to be talking about my thoughts on the ASX200, whether this is going to continue going up, therefore reaching the all-time high again, or it could be another correction. What's been driving the market towards this 12% rally in October and early November, and how we're going to be trading our positions in the market at the moment, as well as the ASX200 is no longer in a bear market, but is currently entering into a bull market, impressive or not, according to BGS20 strategy. So let's have a look. Just want to remind you, this isn't a financial advice, it's just us from BG Trading sharing with you how we apply our strategies to know when to buy and when to sell stocks, how we set up targets, stop losses, and much more, already on this channel. So if you like, please subscribe. If you're not, just don't subscribe, but share this video with someone that you believe will be interested. That's very powerful, sharing videos with others. Now let's understand what's happening here on ASX 200. So if you have bought the index about 52 weeks ago, which would be November 21st, you would be breaking even at the moment. Here's why. You'll be breaking even because you would have bought in this fall here. Pretty much we have bearish intersection here, that's 21st, here you go, 22nd, pretty much. So pretty much breaking even, 2% down today. So pretty much 2% down. So say for instance, the whole world, the US stock market has fell quite a lot, but ASX managed to hold pretty well. In fact, it has outperformed NASDAQ and Dow Jones for a while. And now it's sitting only 5.8% below its all-time high. Okay? Only 5.87% below its all-time high. Which means we did pretty well. Especially, obviously, in the last month. Or I would say 40 days. Right, when we had this low, this bottom here around 6,400. In fact, we had this double bottom, which for a lot TA guys, when I talk about TA guys, talk about technical analysts, that will represent a bounce back on the market. But for me, I always like to compare and understand what's happening, the hype in the market. We've seen that through the year, big rallies through the year. We saw back in January 2022, we saw 8% rally here, and then just followed by a fall. And then we had a 9% rally, which led to the all-time high. So early this year was pretty good until they start hiking interest rates. Okay. Now, after that, we had a couple of massive drops. One drop was 9%, then bounces back 5%, and then dropped again 12%, and then bounced back 11.44%. So it was pretty good bounce. Then dropped again 10%, so it bounced back 12%. So we're expecting here, as you can see, I have highlighted the tops and the lows here. And this chart formation makes me believe, first of all, a couple of things we need to consider in this chart formation. We have just crossed the 250 moving average, which for us is a key indicator. It's indicator whether the market is bearish or is bullish. If the market is bearish, it will be trading most of the time under that the level. But if it's bullish, they will break out the level and will start trading above. Look, I don't think that's going to be bullish yet, but we are, as we speak, at the bull territory at the moment of this chart formation. As you can see, we are just trading above the 250 moving average. Equally, as you see in the past, after big rallies, we always have a some drop on, which is a natural course of the stock market. You know, like you profit, so you make money, so you sell, which makes me believe again that we now not into straight bull market, but we will potentially and most likely, um, and that's the game of probability here, because every single information at the moment that leads, uh, that has profound effect on the macroeconomics is 50-50. It's 50-50 chance that CPI in November going to be higher or lower than the CPI in October, right? So the best way to do is just look at the charts. If you a little bit messed about what decision is going to be taking, look at the charts, see whether stocks or the index trading at technically discounted price, technically fair price, or at FOMO area. Now, if you don't know what FOMO is, we have a dedicated video. Fear of missing out is that when the market, in other words, in simple terms, when the market is trading at expensive levels, and it is now trading at expensive levels for the last 12 months. So for us, it's sensible to say that we might have at least another 5% drop, okay, even if the market turns to be bullish. Okay, so you could have something like this, okay, and then we then could have another 12%, leading then to the all-times high again levels, okay, especially if inflation, CPI in November comes low, which could, again, like 50-50, we don't know. But best thing is detect when the stocks are trading at good prices, so we enter or we sell or we hold still. So now at the moment, I wouldn't be exciting buying stocks like crazy, but we are buying here stocks that are trading at technically fair or technically discounted price, which essentially means stocks that are trading in a chart formation that is under the SMA 40, which is the red line here. So if you don't understand what the terminology is, I strongly suggest to take on BG Trading online course, which the details will be a description below. Just jump into bgtrading.com.au, take the course, you understand exactly what we're talking about. With this course, I can guarantee you that you're never gonna FOMO again, which is, by the way, one of the most common mistakes. Buying on the back of excitement, buying on the back of looking this massive rally and thinking that's gonna keep going another 12% straight away. Okay, it could, but the chances are very low, according to our experience here. Okay, so I would say we might have a 5% drop. Okay, can you hedge? Yeah, you can hedge the markets. If you don't know what hedge means, like protecting your position against the market fall. Yes, I think there's more chance of making money of hedging in the short term, but obviously hedging is only on the short term, not on the long term. Loses its value. So this is the all times high here. We're not fair. ASX did really well. Now, the heavyweights on ASX essentially is formed by iron ore miners and banks, as you always know. So that's why I always sneak and peek into what's happening on the chart formation for iron ore companies. Now, you see at Fortescue got really excited with the lockdowns has been sort of easing, and then obviously the market got excited. Iron ores rose about 25% by memory, and then Fortescue rose 36%, which puts the stock into a FOMO area again, not on a long term, but on a short term. Okay, so therefore, enforcing the fact that this is not a stock that I'll be buying at the moment. So now you probably have a similar chart formation in with BHP as well, which is the biggest iron ore mine. So let's take a look what BHP chart looks like. Yeah, so you see, we have sort of the first reversal indicator here. Okay, so that could at least not crash the market into another correction, but at least hold the market to to continues moving forwards in the short term. So it means that we might gonna see a few more red candles here before going up again, which suggests that we might see a higher low here on BHP. So real probably in the same formation. Let's just take a look and see whether that's true or not. So real Tintoy, pretty similar formation, which suggests me again that we might see a correction back towards $100, and that will pull the market a little bit. Now the question is, would the banks be been taking a correction as well? So let's take a look. Let's take a look on the major banks here. Like starting with CBA, Commonwealth Bank, which is our leading bank. Well, look, that's what driving the market really hard. So CBA, like the banks are is looking really strong with no direct signs of reversal yet. But we could see a sell-off around $108 here on CBA. So let's take a look at ANZ and the other banks as well. Obviously, CBA is a far better bank than most of the others. So the other banks are already taking the correction. Is actually on the way to go up. So which suggests to me the finance will potentially go up and mining iron ore go down. So therefore, sort of bringing the index to a balance. And enhances the idea that we might have only a small correction here, 5% max. I don't think, unless inflation comes really high, I don't think we will revisit these lows here. It looks like we already tested the lowest levels, and then we might going to see a 6,800 and then a bounce back towards the all times high sometime in the new year. That's what it looks like here. And I like to, rather than predict it, I like to trade with the market, which means I'm really waiting for some red candles to start sort of filling up into the hedge position. Okay, but the overall sentiment is positive. But still remember, 50-50 chance that CPI will come up in line, higher or lower. So we need to see what's happening. Then we have confirmation, and then upon the confirmation, we will see what the next direction on the market will be. And then not to mention, obviously, what's happening with the local market here, the local CPI. We wanted to see our CPI in Australia to go lower as well. So overall, sentiment, I'm expecting a small correction of 5% before potentially speculating now that we'll see an all-time high early next year. But again, we could see moving sideways for a while before going to all-time highs, which means sideways will be ranging between these 6,800 and 7,200 for a little while, making higher lows, and then obviously breaking out through some stage next year. Okay, so that's my thoughts on the market. Positive sentiment at the moment, but it's still on the back of October CPI. Potential correction, but also strong likelihood that we'll see all times high popping up next year, especially if recession rates hits. Simply for the fact that if inflation is down, recession hits, then we might see some central banks coming up with some talks about cutting interest rates in 2024, or some quantitative easing again, which could be also in 2024. And obviously, remembering that the market always price what is looking forwards in 24 months. So early next year, if we have talks about a recession and potential interest rates cut in 2024, we might see this effect early next year already, which brings us to a very exciting position on ASX. Guys, this is my thought. Let us know what you think. We spend a lot of time putting those thoughts together and gathering some research information. So let us know what you think about this. And and put a comments below. We'll be very happy to discuss this further with you guys. Thank you very much for watching, and I'll see you in the next video. Bye. The whole idea when we designed BG Trading BGS20 strategy was to use only a set number of indicators to make it simple and clear to understand and to be able to apply our KPIs very easily and very effectively. So you don't have to be any Wall Street smart person to be able to apply those strategies. We really hope this course will help you to make better decisions and make successful trades. See you in the course.